Hi, this is Tom Suvansri at Perennial Pride, and we're here to talk about unique strategies that the high net worth people are using to manage and protect and grow their wealth, whether it be unique tax strategies and insurance sort of philosophies, and even a virtual family office. So stay tuned and listen and learn more.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owners Association, where real estate investors have found success since 1968. I'm your host, Brian Hamrick from Hamrick Investment Group. This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Get ready for the Midwest Real Estate Investor Conference in Grand Rapids, Michigan. Join hundreds of real estate investors for networking, learning, and growth. Be sure to mark your calendars for April 24th and 25th of 2025. Hello and welcome to episode 474. Achieving financial control and long-term stability is a goal for many real estate investors, but it often requires more than just buying properties. It takes a strategic and holistic approach to planning. My guest today, Tom Suvansri, is a financial expert and the host of the Perennial Pride Podcast. With a background in holistic financial planning and real estate investing, Tom specializes in helping rental property owners and investors create personalized strategies for building wealth and achieving their financial goals. Today, we'll discuss how a virtual family office model can empower investors to establish control, freedom, and certainty over their financial futures. Tom, welcome to the show.
Brian, thanks for the great introduction and really happy to be with you today.
Tell us a little bit about yourself, Tom, and how you got started investing in real estate.
When I was working my W-2 job, I was following the typical path, right? The one that rich dad, poor dad would not advocate for, right? Get a good job, right? Invest in your 401k. And, enough of the 2008 hit impact really struck me. And it really pushed me to start thinking, is there a different path? And I started reading tons of different alternative ways to invest. And I started with real estate, right? Real estate was what I had learned about from others, that this is a way that a lot of people are building significant wealth over time. But it took me a while to finally kind of get started. It was, so ingrained in the typical approach that it took me a while, right? I read a lot. I was one of those, analytical guys, just, analysis paralysis type guys. But I did start finally really investing in 2014 and purchased my first rental. I started loaning things out to people, money to folks. I started really immersing myself in alternative ways outside the typical just stock market investing. So I sort of just continued to grow from there.
Tell us about your turn to real estate. Like what did that look like? And what was your experience with it?
I still vividly remember the real estate investor meetup I went to. The first one I went to, and I was like, I don't know anything. I'm scared to death. I almost didn't go in. And so I forced myself to go in. I said, you got to get in here and challenge yourself. So I walked around, met a lot of people, and I realized a lot of people didn't know what they were doing either. So it wasn't that big deal. And as I left that meeting, I caught a glimpse of somebody there. And for some reason, I went to go talk to him. And then we were talking for the next 3 hours, right? We started learning. He was a seasoned real estate investor in the area. He had purchased maybe 30 properties locally, managing them all. And the one thing that I learned that he needed, he didn't have, which was more capital. And I said, ooh, that's what I have. So I said, how do we partner together? And then after loaning him money to secure more deals, he helped me secure my first deal, right? As an investor, a rental property. And it's ironic, I'm actually in the midst of closing on that to sell now after going through the BRRRR strategy. And I've had it for a while. And I recognize now it's too much equity stuck in this property, not earning enough given the economics today. And I've seen it come full circle now. We're close to closing on it. So it was really, it's amazing to see this over the last 10 years, which is crazy to even think about, of how this has gone. But this is a long run sort of strategy that I didn't see it. Now I do. Right now I'm experiencing it firsthand. So that was kind of my real estate sort of entry. And even now I'm, seasoned over 10 years. Now I'm seeing kind of the turnover on some of the properties now.
A lot of people who get into real estate investing, they always wonder where to start. And the answer is often, well, what is the assets that you bring to the table? What do you have? In your case, you had capital. And that was able to align yourself, made it available to you to align yourself with someone who had experience, who could kind of show you the ropes. What did you learn during that process? Because it sounds like you started off as a lender to this particular person, and then eventually he said, "Hey, I'll just help you figure out how to buy your first property." Like, what did that look like, and what did you learn during the process?
It was fascinating. This is one where it was at the time it was a short sale. Like learned all that process, and I was actually in the house with the owner as he's unpacking. So it was a very unique experience. I'd never come across this before, and it was a very lucrative process, but we went through and renovated the whole thing in about 3 month time. And I'd never done a renovation in my lifetime. And so what I had quickly realized that this isn't where I felt most compelled to be in for real estate in terms of being in the construction and design. I was more in the financial side, right? And so I quickly realized, but it was good to experience it and see the flow of it, right? Because this was one where we renovated, and then 6 months later, I refied it out and got all my money back. And I said, "Wow, this is great. This is not a bad deal." And I got all my money and went somewhere else, and it cash flowed for 9 years. So, but it really struck me that this is not, being hands on was really not my cup of tea, and it wasn't what I wanted to do. So I started expanding and doing more turnkey properties over time, right, in different states that had better economics to them. As we know, right, there's a lot of states where, just more favorable, right, economics, like whether it be Tennessee or Florida and other places, Indianapolis, where I have properties, and I sort of expanded from there. But I learned where to stay in my lane, right? It wasn't the hands-on stuff.
So I heard you say turnkey. So you're buying properties out of state and someone else is taking care of them, managing them for you. What, from a financial perspective, because that was your strength, what else did you leverage that strength into as far as real estate is concerned?
And at the same time, as I was kind of exploring alternative ways to invest, other assets, and one of the things that I came across just by fortune, I was up reading one night and I came across this concept of the infinite banking concept. And I said, "What the heck is this thing?" Right? This is nothing I've ever heard about before. And I started digging more and researching. I'm an avid reader and researcher. And I explored this thing. There's a book called Becoming Your Own Banker by Nelson Nash. And I said, "What is this thing?" And so it was an approach or strategy to sort of manage the financing needs in your life, right? Well, what is that? Well, I have to spend money, or I got to borrow someone's money. I got to spend it, somehow. My money or someone else's money. So this was an approach using uniquely designed sort of, which I never even thought about, life insurance policies to store money, and then leverage the capabilities within the policies to borrow, right? You're just using them as a different financing source. And so it was a really eye-opener to me, because I started learning that there are families, and say the Rockefellers over history have used things like this to help perpetuate wealth from generation to generation, but finance things in their life. And I started using it to finance real estate. Right? It was just another asset to finance. I could just use my own money, but I'd actually would store my money in life insurance and then borrow their money to buy properties, right? And I started doing that over time because I had a lot of money in life insurance. I just never actually used it, right? Until I came across this concept.
I've had people on the show talk about infinite banking and using life insurance. I never understand it. So break it down for me. Are these whole life policies, term life policies? I mean, what kind of policy do you have to start with to begin to?
There are people who use things other than whole life policies, but they're typically whole life policies. That's the way it was originally designed, right? Through Nelson Nash, that's what he learned, because it's a much more stable policy, right? More of the risk is borne on the life insurance company. But the key is that you design them uniquely in a way that it adds cash fast. And that's really the benefit of using these. It's less about the death benefit. It's more about how can I store more wealth into these vehicles and keep it life insurance.
So when you say store cash fast, I hear I got to put more of my own money into this life insurance policy. So what does that look like? What's the cost of even starting a whole life policy that, minimum investment you have to make?
Yeah, and a lot of it, just to be frank, like a lot of it's because it's life insurance. It's based on your age, your health, right? All those sorts of things. So, the way I explain it to folks is like you're going to store money somewhere, whether it's in your bank account, right? Typically, that's where most people will store it, and probably won't get much for it, low interest rates, but it's accessible, right? So you store your money there. So this is just a different financial institution you're storing. And ironically, this is where people used to store money, right? Before, that the banks and Wall Street, all that stuff started coming to be a normal part of life. People used to store money there because they run a very tight ship. It's conservative. They're not taking excessive risk. So in this sort of space here, like to me, it's how much you saving somewhere, right? And I wasn't going to put it into 401ks that I wouldn't be able to access for 30 years anymore. So this is the money where you're just storing it in a different institution.
What's the minimum investment in something like that, Tom?
For me, you can go as low as $100, $200 a month if you really wanted to. But the reality is, if you're using it in the way that we use it, that's why they call it infinite banking, that you want to store as much as possible into here because you're going to leverage it to invest somewhere else anyway.
Let's say you put $200,000 into a whole life. Are you getting interest on that while it's in there? Or like what does that look like?
Whole life and term life actually work in opposite directions. So whole life is expensive to start, right? And that's why people hate it. It's cheap on the end. Term life is the opposite. So in this case, you can put in over time. It's a long run sort of savings vehicle, right? So it takes some time, maybe 3 to 5 years before you're kind of breaking even on these sorts of, so you have to recognize that's a long-term strategy with it, right? And not need to access all of those dollars, right? So you couldn't even just shove 200,000 unless you were looking to put 200,000 a year, which some people do, right? Because they plan on using it. So it depends on your income because it is life insurance. So they will not allow you to overinsure yourself, right? You're valued a certain way. So these policies, that's why it's important as you're building income and assets, right? This creates a sort of a shield over all your assets that if you ever need it, you're going to be able to pass that on tax-free to the next generation. And that's what a lot of people use it for.
If you ever need it, you mean when you die, you can pass it on. You'll need it when you're dead.
Right, yeah, which is a guaranteed event. And, which is the opposite of term life is you cut it loose at the time you're absolutely guaranteed to die.
Explain how people can borrow against the whole life insurance policy then. I mean, that's the whole concept behind infinite banking, right? Is you're going to borrow against this policy.
Just like a HELOC, right? You have an asset that is building up with equity, right? Just like a home has equity and that was HELOC. Well, within these sort of design policies, you're building up cash, they call cash value, which is basically the equity of your death benefit, right? Your death benefit is $1 million. Your cash value, say, is $100,000. That's your equity. And so the life insurance company says, okay, I know you will eventually leave this earth. You're the best risk there is. I'm going to loan you our money as life insurance and let you dictate the terms. When do I pay it back? There is an interest charge to it because you're borrowing money. But your cash value inside the policy continues to grow undisturbed, right? Tax deferred. And it can be very much tax-free if used properly. So we use it as a storage bin, but then within the policies, they have a guaranteed loan provision built in that says, hey, I can call my life insurance company and they don't check my credit. It doesn't show up any on credit scores and you just ask for the money and they give it to you, right? There's no reason you need to give. Now you have to pay that back as an honest person, right? It is a loan, right? Just like you're borrowing. So people who are not disciplined should never do these things, right? Because you're borrowing someone else's money to use.
What kind of rate are you paying on that money?
These days where interest rates are, they can be between 5.5 and 6, right now. But you pay that back whenever you kind of want to. There's no structured 30-year term to it or whatever. It's all flexible for the user.
Am I hearing you say that if, let's say you have $1 million whole life insurance policy and your equity in it is $100,000 that you put in, you can borrow that 100,000 against that 100,000, or you can borrow against the whole $1 million?
It's the former. So it's your equity. So that $100,000 is what they would use to say you can borrow against that. That's your asset and the death benefit protects the company, the life insurance company, because if you don't pay that back, two things could happen. The policy lapses, right? And they say, oh, my $1 million death benefit is no longer due because you collapsed this thing, which happens, right? People are not disciplined with it. But you can borrow up to 95% of your cash value, typically, with most companies. And you can take it to banks. They'll do it too, right? Just like a HELOC. But then you lose a little bit of control.
The 100,000 that you put into the whole life, what kind of interest does that usually get?
Over long periods of time, again, this long periods of time, historically, it's in the 4 to 5% range, but in a tax sheltered environment, right? So when you're not using it for cash, it's a good place, right? And like these days, you can actually get something on your cash, right? Money markets, which is not normal.
So you're saying with the whole life insurance, that interest is accruing at tax deferred. There's no tax on that.
No. And so you get dividends with it that, if anyone plays the stock market, you get dividends, you get paid tax on that. Well, you get dividends from these types of policies and there's no tax paid in that year, right? I joked with my CPA the other day. I said, have you ever seen anything from my life insurance policies? Like, never. He said, do your wealthy clients do it? He said, all of them do it, right? Because it's shielded. And you can't actually sue for that money either. That's why a lot of wealthy people like it, because it's immune from most states. You can't sue against it, right, for litigation. So it's protected.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com. If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB and Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com. Save the date for the Midwest Real Estate Investor Conference happening April 24th and 25th of 2025 in Grand Rapids, Michigan. This event is the perfect place to connect with fellow real estate investors, gain valuable insights, and elevate your real estate game. With a lineup of expert speakers and numerous networking opportunities, you won't want to miss it. Let's talk about other strategies of high net worth people. You got the whole life insurance policy. What'd you call it?
Infinite banking.
Infinite banking. I want to make sure we touch on family offices. Is there anything else that in between that you want to bring up?
No, I think it hits on it nicely because, if the family office is one of those terms, and most people probably equate it, anyone knows about it, is tied to the Rockefeller family. And so that's where basically they have a team of lawyers, CPAs, insurance people, investors, and investment advisors who are working on their behalf.
It's not an office building and your family owns it. It's basically the team that's working on your family, your high net worth, ultra high net worth families financial health and well-being and making investments on your behalf.
Yeah, so that's, obviously most of us, and maybe you have the wherewithal. I don't have that to be able to hire all those people in-house and be on my family's payroll. But, what has been born out of that, and there are some legitimate family offices for people who have like 100 million or higher, but like people who are still accredited, and I know you work with primarily accredited investors, the family office has it's still a benefit, but it's kind of more of a shared family office in that sense. Right. So when I started looking into this to get into after leaving my W-2 job, I said I didn't want to just be a normal advisor. Right. There's already too many typical financial advisors out there that kind of very strictly play in one space. And I said, well, what do most people want? Well, what I wanted as a client, I wanted someone to help me with all of those different areas, from estate planning to taxes to investments to legal things. So it just really rang true to me that to have like this surround sound. So the family office that I started back in last year was related to Rockefeller, and we help people in a bunch of ways. One, obviously advanced tax planning, right? As you're getting higher net worth and income levels, as our progressive tax system dictates, you're going to pay more taxes if you don't pay attention. That's just the way it works, right? And a lot of people want help with that. And ironically, most CPAs don't really even do that, right? Their job is to report it, not to strategize. And as I talk to more of them, they get asked, but they don't have the solutions for this, right? So there's advanced tax planning. Obviously, you have the wealth management, which is going to do things of like what you're doing, Brian, like broaden it out outside of just the public markets. When you look at the Tiger 21 world of where they invest, they have a portion of it, but the vast majority of their assets are in private equity and real estate, other things, right? They expand it outside the public markets.
Mention Tiger 21. Tell our audience what you're talking about.
So this is an investor group that successful business owners, I think there's a threshold you have to have like 100 million of net worth or something higher, right, to be in this club. And basically, it's an interesting group where they share where they're investing, right? And they work with each other to help each other become better investors. And what they do is they show where they invest, right? They share it broadly, not individuals, right? Where they're investing, what allocations. And, as you'd imagine, big things are private equity because they're mostly business owners. Real estate, right, is the other one. And then public markets kind of third or fourth on the list, right? But it's usually more private sort of placements, or real estate is kind of where they spend bulk of their money.
Is it kind of a networking mastermind group, or do they also have a family office component as well?
It's primarily sort of a networking, like being around other successful business owners, and they're just trying to become better investors. So they share with each other, like from what I understand is they actually show where they're invested to each other, right? They're very transparent about it. And so then they leverage the combined mastermind to help them sort of pressure test what they're doing, right? And so they help each other sort of grow and maintain their wealth. But it's an interesting thing just to follow, like where do they go? Why would they only have a portion of their money in public markets while we as normal folks are told to put everything there? That's all you need, right? You kind of just wonder.
They have access to things that us normal folks don't.
Right. And that's the type of stuff that you're sharing your investor group. Like there's other things to invest in. So outside of wealth management, obviously risk mitigation is another big area. We talked about life insurance, but as you get into business, there's obviously a lot more risk and other things to consider around risk mitigation. And then we have an arm of estate planners and legal type folks, whether it be structuring your businesses or creating, estate plans or trusts, right? And then there's an arm to the group that is really business advisory. And that really is helping more directed towards like a business owner who's looking to grow their business, hire new people, sell their business, whatever the case is for business owners, because what I sort of realize is that's a big gap. A lot of financial advisors are not even actually helping them, right? Because they're typically trying to go after folks to manage their assets, right? Put their assets under management, right? And well, a lot of folks who are business owners, their biggest asset is probably their business, right? For the most part, right? As they're building it. So there's a mismatch. So these guys need help though, as they're exiting businesses, preparing to exit. Like there's a lot of things, estate planning that So this holistic sort of view, now you can bring in these sort of experts and specialists to actually talk together, right? What a novel idea, right? Imagine you're at a hospital. Wouldn't you want your nurses and doctors and assistants all kind of collaborating to support you and as a patient? Well, rarely does that happen in the financial world, right? We put us in the middle. We got to figure out all these different people who have different expertise and understand how they fit together. Well, I love this model because it allows us to bring in the right people so you can get different lenses and perspectives to give the ultimately a better result, I think, in my mind, and more holistic.
Am I hearing you say that you actually have a virtual family office where you help people, high net worth people with their business, with their investments, to take a holistic view and all that?
So that's what I adopted this model, and there's a network that I'm, not a mastermind, but a network that I can pull 67 different experts in these different spaces as my team, right? Because I know there's impossible to know all these things, right? I'm just not able to provide it. So I have a network that I can access to support my clients as needed, right? And that to me is where I wanted to be. I didn't want to just sell a product.
When you're out there talking to potential clients and you're talking to our listeners right now, like what is a threshold where they have to be to even consider talking to someone like you who has a virtual family office?
I would say, listen, I think the best, I think this is your world anyway, too. Like if you're in that credited space, right, you have the income threshold where, obviously things like taxation and maybe legacy planning comes into play. And you're maybe business owners, right? If you're making that level of wealth, you're going to have more things to manage. So that's where I think the virtual family house fits better. Whether you're a business owner, successful business owner is credited in terms of investor, right? I think that is a probably good threshold as a sort of general benchmark. There are things we can do certainly for folks who are not there yet, but you just probably couldn't take advantage of most of those things, and some of them are probably overkill, right? For a lot of folks, right? It just is. Maybe not, it's too early in the game. So most of the folks are accredited. They have, a lot of them are business owners, right? To some degree, even if it's part-time, right? Those usually enter into the virtual family office space.
I'll share my bias with you, but then I'll burst my bias, because my bias has always been that wealth advisors, they want to put you in stocks, bonds, and mutual funds. And they're just going to, get you what you could get yourself if you did a Vanguard 500 fund or something. But I've recently talked to some ultra high net worth people who have put their money with wealth advisors who actually are doing some very creative things, like taking their stock holdings, selling puts and calls and options, and getting them all kinds of tax benefits from that, and generating like really good profits. So where does your virtual family office fall in that? Are you leveraging some creative, maybe higher risk things like that?
Yeah, so we have options for that for the right sort of folks who are looking for things like that. But by and large, to your point, like for most folks that we're dealing with that are just getting started or don't have massive wealth yet, right? Playing the sort of more passive approach is probably the best, right, for their situations. But we have options for people who are looking for much more active management and recognize that they're willing to take on more of that risk for the upside, right? And again, this is the beauty of it too, from a Tiger 21 sort of perspective, is that as we're going through this, like my community, the people I'm helping maybe with certain areas, they also have things that they see and are connected to, whether it be private equity and other things that they share with other people in community. And that, I think, is the beauty of it. It isn't me driving all of the answers to everything. It's impossible, right? But the community themselves, they want to help each other, just like the Tiger 21's model. Like they see other successful, good people that are trying to do good things, they actually share and they've connected them. So we do have that option for the right types of people, but most of them at this stage are not needing it.
Tell our listeners how they can find out more about you or get a hold of you or find out more about your company.
Obviously, my website, perennialpride.com. There's a lot of information there. And
Perennialpride.com.
Perennialpride.com. You got it. And then my podcast, Perennial Pride Podcast, right? I don't have as many as you, Brian, but I have been doing it for about a couple of years now, and we just have a lot of unique guests and different sort of investment philosophies and tax strategies that people could sort of learn from. and just at least open your eyes to alternative ways of dealing with it. And then, obviously to reach out and chat, always looking, comfortable to chat with folks for 15 minutes and just to see if there's anything that we can do to help you. You can book a call for our website for sure.
Tom, what's your favorite hack or app?
I really have started to use Evernote a lot more these days, because what I've come to realize that, there's a lot of things floating in my head and they come at weird times, right? And if I don't write them down, they go away, right? Or forget about them. So I've gotten to a really good rhythm of being able to take that, and when I get it down on paper, right? And I always go revisit it. And I've gotten a lot of great ideas over the years just because of that, because I actually make a point to jot it down and reference it later on. So it's something that's really helped me to kind of take my creative juices and get it down on paper.
And Evernote is an app that allows you to do that?
Yeah. So you can take all these notes and, classify them, and you just, jot a note down on a, topic that sort of resonated with me. And then afterwards I can go back and figure out what it means.
Thanks for coming on this show today, Tom, and talking about some of the higher net worth strategies and things like infinite banking, virtual family office. You talked about Tiger 21 and what they do. We have all levels of listeners, and I think no matter what level they're at, building these neural pathways to some of these strategies that you're talking about is very valuable. So I appreciate you coming on the show today and sharing all this with us.
Thank you. I really appreciate it, and I enjoyed it. And thank you for all that you're doing, and appreciate it.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's higinvestor.com. And you can also ask questions and join us on Facebook by going to RPOA, Rental Property Owner and Real Estate Investor Podcast. And remember to save the date for the Midwest Real Estate Investor Conference on April 24th and 25th of 2025 in Grand Rapids, Michigan. It's going to be an event you won't want to miss, packed with invaluable sessions and opportunities to connect with like-minded investors. Keep listening for more updates, and we look forward to seeing you there. This episode was sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB & Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com.
You've been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.